Everybody, and welcome to another edition of MSATP TV. Today, joining us is Jim Arnie to talk about the legislative session that's going on down in Annapolis right now. So, Jim, why don't you introduce yourself and tell us a little bit about what's going on?
Thanks, Bill. Obviously, as Bill said, Jim Arnie, and I've been retired from the Comptroller's Office for 10 years, going on, this is my 10th year. And one of the things I do for the society is monitor legislation. And the session began back in January 12th and runs for 90 days. So let me just say that it seems like it's been a quiet year. I was anticipating a larger number of bills being introduced because it's an election year, and that has been the trend over the years. In 2018, we had over 3,100 bills introduced. Looking at the numbers this year through this past Friday, February the 11th, we've had a total of 2,297 bills introduced, and that's actually 9 more than for the same period last year. So we're just basically running where we were this time last year. This year, I have referred 156 bills to the Society to review and determine if there's any action needed. And that's about 16 bills fewer than what I referred this time last year was 172. So it's pretty much the ballpark. So with that said, I'll start covering the bills and just give you a brief description of what the bill does.
All right, before you get started with that, Jim, I should just like to remind our audience that if you have any questions as we go along through this, please feel free to type them in, and we will try our best to answer your questions online as we go along. So I'm sorry, Jim, go ahead.
I'll give a bill number in case somebody's interested in making a note of it and looking it up afterwards and so forth. If there's a cross-filed bill, I'm not going to give both bills, but when you look at the original bill, it will give you the cross-filed bill number, just to kind of save some time. The first one is HB 308. This is impacting the Comptroller's Office, and it would require an online payment processing portal. And when you first see that, when you're in the tax preparer business, you think, good, I'm going to get to see my clients' estimated payments because they never keep good records and so forth. But when you actually look at the bill, that's not what this bill is all about. This bill would require the comptroller to maintain an online payment processing portal to track payments made to payees. Payee is an entity, could be a nonprofit corporation or local government that is providing goods or services to the comptroller's office and then submits an invoice. And this portal will require the comptroller's office to log in the receipt of that invoice, provide a person's name and contact information that's reviewing and approving that invoice and following it on through. And nothing related to estimated payments from that standpoint. Next bill is HB 366, again affecting the Comptroller's Office. And this is the Legal Division and Private Letter Ruling Procedures. This bill would establish a legal division within the Comptroller's Office to provide expanded and detailed tax guidance to taxpayers and to issue private letter rulings, much as the IRS does. And the reason why this is being introduced is because with it, if it gets approved, it would also authorize 6 new positions. And in order to get new positions, you have to go through the legislature for their approval. I find it interesting also that both the HB 308, the online payment processing portal, and the Legal Division and Private Letter Ruling bill, the House version was introduced by Delegate Learman, and she's running for comptroller. So take it for what it's worth. Senate Bill 275, and I should say that these first, I think, 5 bills are ones that the society has taken a position on. we're in favor of, the society is in favor of the first two bills that I mentioned, and the third bill is Senate Bill 275. This is Labor and Employment Family Medical Leave Insurance Program. This is where a certain percentage of an employee's wages would be set aside and put into this leave fund. It would be 0.75% of the weekly wages, and 50% of that would come from the employee, 50% would come from the employer. And any employer that, or any organization that has at least one employee would be required to participate. And it does not specify for, like, if you're a small business and 50 employees or less, you would be exempt. So the society is opposing that bill. I have a couple other ones that I'll get to later that just came up, I think on Friday. I just got the responses, so I'll touch base with those momentarily. And both of those bills dealing with the Comptroller's Office are cross-filed bills, both in the House and the Senate. I'm moving now to one more, the Senate Bill 403. That was the governor's bill. It exempts business entities from paying the filing fee required with the submission of the annual report to assessments and taxation if the annual report is filed electronically. It would apply to annual reports due on or after April 15th of 2023. Moving now to tax bills, they could be either personal or corporate. House Bill 0002, and this bill also has a cross-file bill. This would allow the work opportunity tax credit that is allowed on the federal return. You would be able to take that same credit on the Maryland return. I think the federal guidelines are you get 40% of the first $6,000 of wages, and then you have to employ, that employee has to be a member of a targeted group, such as a veteran, residents of empowerment zone, rural county, formerly incarcerated, or those convicted of a felony, and so forth. There's about 8 different classifications. House Bill 124, subtraction modification for veterans. This was kind of unique. This wants to give a subtraction modification each year to all the veterans that received an honorable discharge. They would be able to subtract $3,000 from their income. House Bill 186 is another subtraction for centenarians. If they reach the age of 100, then when they file their tax return, they would get a subtraction modification of the first $50,000 of income. And I don't have the number, but that bill was cross-filed this week. So that has a cross-filed bill with it also. Another subtraction modifications, and I probably should have said at the beginning, the state of Maryland ended last fiscal year with a $2.5 billion, that's with a B, surplus. So if you see a major theme in all these bills, it's ways to give funds back to, whether it's you want to say to the taxpayers or to specified groups or whatever, you can do that. House Bill 189 is a subtraction modification on retirement income. This expands the exclusion under the definition of individual retirement account and IRAs and so forth. And then you would just be able to include a larger amount of the exclusion. House Bill 252, Return Preparation Assistance Program for Low-Income Families. This one is a little bit unique, and it's also has a cross-filed bill. But this would, beginning in tax year 2025, the Comptroller's Office must identify Maryland residents that, 1, who are eligible for the state earned income tax credit, 2, failed to file a Maryland tax return, and 3, whose employers reported their wages to the comptroller's office. And for each eligible taxpayer, then the comptroller must go in and take that income, use standard deduction, and come up with a taxable and apply the income tax credits that those taxpayers would be entitled to, and then notify the taxpayers. And also, if they also can identify someone that filed the return but did not claim the income tax credit, they have to file, the comptroller's office has to complete an amended return for them. And if they did not file a return and the comptroller files it, normally the comptroller's office is authorized by statute to apply a 10% penalty for non-filing, and this bill prohibits them from assessing that 10% penalty. House Bill 315, another subtraction modification for military retirement. Right now, if you're 55 years or older, you can get the first $15,000 of your military retirement as a subtraction, and this bill would increase that $15,000 to $20,000. The next bill is HB 317, another subtraction military retirement. It would give a subtraction modification of the full amount of the retirement, but it would be phased in over 4 years. Obviously, 25% of whatever the retirement would income is would get taken in the first year, 50% the second, 75% the third, and then 100% would be exempt or subtraction modification on the fourth year. Corporate income tax, single sales factor apportionment, and this is a cross-file bill. This, when I was director, these types of bills were coming up. This bill creates a subtraction modification against the corporate income tax for certain corporations whose deferred taxes were increased by chapters 341 and 342 of 2018 when that legislation was enacted. So we'll have to see how that pans out for the remainder of the year. House Bill 403, income tax subtraction, employee-owned businesses. This is a cross-file bill, and this is dealing with the income from a qualified transfer of stock or membership interest of a Maryland corporation or LLC. And if the qualified transfers to a direct share ownership plan, the subtraction is limited to the lowest amount of stock or membership interest transferred. So this is a new one for this year. House Bill 405 is a cross-file, has a cross-file bill. This is a tax credit for income tax, and it's dealing with mechanical insulation installation. Apparently, this mechanical insulation is a new method of doing it. It's supposed to be much more efficient, and the credit is 30% of the costs incurred to install the insulation. House Bill 420 has a cross-file bill. This is the governor's bill, and what this does is, on the last day of the taxable year, individuals receiving Social Security or survivor's benefit or is at least 65 years of age, is not employed full-time. In 2022, the subtraction would be $10,000. 2023, it would be $20,000. 2024, $30,000. The next year, $40,000. The next year, $50,000, and then the next year, 100% of the income would be subtracted. So I find it highly unlikely that that bill is going to get passed in that venue. House Bill 422 also has a cross-file bill, Maryland Working Marylanders Tax Relief Act of 2022. This bill makes permanent the temporary expansion of the state refundable earned income credit that was enacted in Chapter 39 of 2021. That was enacted last year, and all this bill is doing is making that temporary provision a permanent provision. House Bill 457, corporate income tax. This is the throwback rule in combined reporting. Combined reporting seems to get nominated every year and comes into play, so we'll have to watch that one and see how that plays out. But it's not a new bill for the first time. House Bill 466 is personal exemption, disabled individuals. This bill would allow an additional exemption amount of $1,000 if you have a permanent physical disability, much like if you're blind, you get the additional $1,000 exemption. House Bill 473, subtraction modification, military and retirement income again. This is simply increasing it to $20,000, the maximum amount of retirement income that can be excluded. And in order to get this to qualify, the individual must have a permanent 100% service-connected disability as determined by the U.S. Department of Veterans Affairs. House Bill 499 is another subtraction modification for retirement income. This bill would exempt 100% of eligible pension income phased in over 3 tax years and allowing income from the additional plans or sources to be included within the subtraction modification. That would be the individual retirement accounts and annuities under Section 408, Roth individual retirement accounts under Section 408A, and simplified employee pensions under 408K of the IRC. So you can see everybody's trying to give money away. House Bill 597 in an income tax subtraction modification for military and public safety retirement income. Under the current law, if a military retiree is 55, not to 65, they can get a subtraction of the $15,000 of their military retirement income. And if they're over 55, they get, if they're under 55, they get $5,000 of subtraction modification. And if they're over 55, they get 15,000 subtraction modification.
Okay.
What this bill does, it's dropping the age requirement on the first one from 55 to 50 years. And instead of the first 5,000, it would be the first 15,000. And then the individual is at least, instead of 55, anybody over 50 years of age, instead of it being the first 15,000, it would be the first 30,000. That would be.
Well, I'm glad they're looking out for the veterans, but it seems like most of the bills have to do with their retirement subtraction modification.
So far, that's the way it's been.
Yeah.
House Bill 623, subtraction modification of essential healthcare workers. This is an emergency bill, and they get a subtraction modification of $2,000 for anyone who was an essential worker. Essential worker means a licensed physician, licensed practical nurse, registered nurse, or emergency medical services provider who performed a duty or work responsibility. House Bill 681 is income tax credit for pet-friendly rental dwelling units. If, and this has a cross-filed bill, if you have a condo like in Ocean City and you rent it out and you allow them to have pets, you can get up to $200 credit for each dwelling unit each time, up to a maximum of $2,000. But then you have to provide a copy of the arrangements, the lease agreements. You can't charge them for a pet fee or anything of that nature. So this is just another giveaway to somebody's pet project, pun intended.
Mm-hmm.
House Bill 775 is establishing a new checkoff on the tax return for the Maryland Pediatric Cancer Fund. House Bill 787, again, Retiree Income Tax Relief Act of 2022. This bill is expanding the definition of qualified retirement plan, and it includes everything that's not allowed. And it's doing what it does. You would add up, if you have income from Social Security, railroad retirement, or a retirement plan, you would total all of that income from those three sources, and then you would get a subtraction modification of the lesser of whatever those three total, or $55,000.
Okay.
House Bill 839, income tax rates and itemized deductions. This is one that has been recommended that we take a position on. And this does two things. It reduces the tax rate for income that is over the 3,000. When you get into those brackets into 3,001, say to 100,000, it's reducing those percentages from 4.75 to 4.5% for 3,000 to 100,000. This is for single filers. And then from 5% to 4.75% on 100 to 125,000. Taking the old 5.25%, making it 5.1% for 125,001 to 150. 5.5% would become 5.35% for income 150,001 to 250,000, and then the final rate of 5.75% remains for any taxable income in excess of 250,000. It does the same thing for the joint filing status or surviving spouse head of household. And it also would enable you to claim itemized deductions on your Maryland return, regardless of how you, what method you used on the federal return.
Okay.
So there's a joint benefit there. House Bill 841 is also the second one that the reviewer has recommended we support. This is expensing of business property, recoupling with the federal law. And this repeals the income tax modification for certain deductions for the cost of business property that is treated as an expense for federal income tax purposes, and applies this to all tax years beginning after December 31, 21.
Okay.
So we would recouple back up with the feds on that. House Bill 845 is a subtraction modification, income of healthcare workers. This also has a cross-filed bill, and it allows for tax years 21 and 22 a subtraction modification under the Maryland income tax for the first 25,000 of income attributable to an individual's work as a healthcare worker during the taxable year. And it provides you with different types of services and so forth that would qualify for that.
Okay.
House Bill 941 is another new checkoff on the Maryland tax return, and this would be for the Lions Vision Research Foundation. And my experience with those when I was director is when you add new ones, you don't get more contributions. We used to term it, they cannibalize the other ones. The same people will probably give, but now they'll go to this check off as opposed and no longer support the old one. House Bill 978 is another caregiver tax credit, following much of the same, another 2,000 for any taxable year, and it can't exceed 5,000. So it's a lot of giveaways. House Bill 988, income tax subtraction modification for classroom supplies purchased by teachers. This increases that amount from $250 to $500. House Bill 1 198 is a subtraction modification, retirement income. This also basically adds the other plans that currently don't qualify for to be included in the pension exclusion. It would include those. Now under sales and use tax, House Bill 15, there's a bill, invasive and native plants, classification, listing, use, and sales and use tax. What this bill would do from the sale standpoint of the sales and use tax, this bill would exempt the sale of native plants to Maryland species from the state sales and use tax. And I would assume,
So if you buy a black-eyed Susan, it would be exempt from sales tax.
under this bill, it would appear. I would imagine the Department of Natural Resources will have to put out a list so that
Of native species.
what would qualify. House Bill 41 is a sales and use tax, tax-free period, winter weather shopping for students. And this establishes a 14-day sales tax-free period beginning in 2022 for the specific winter clothing for students costing $100 or less. The tax-free period would be to begin on the first Sunday after Thanksgiving and run through the second following Saturday.
So just in time for your Christmas shopping, you'll be able to do some tax-free shopping for your kids.
Yeah, and maybe, well, I won't get into that. Accessory item or clothing includes winter coats or winter footwear purchased for the use of students. Accessory items, which includes hats, scarves, gloves, are not eligible. There's a number of, and I'm just going to give you the brief description, but there are a lot of sales and use tax bills that are exempting specific items. The first one, House Bill 282, this also has a cross-filed bill, would exempt diapers from the state sales and use tax. House Bill 288 would exempt baby products from the state sales tax. Baby products would be baby bottles, baby bottle nipples, and infant car seats. House Bill 364 would exempt medical devices from the state sales tax. And that has a cross-filed bill, and medical or clinical thermometers, pulse oximeters, and blood pressure monitors would be exempt from the state sales tax. House Bill 492, oral hygiene products, and this has a cross-filed bill. So items such as toothbrushes, toothpaste, tooth powders, mouthwash, dental floss, and similar oral hygiene products would be exempt from the state sales and use tax. House Bill 502 would be a tax-free period for back-to-school shopping, which we already have now, but it would add a category, sale of sewing items. They want added to the list. This has a cross-filed bill. And items such as fabric to use to make a piece of clothing would be exempt. Thread, zippers, bias tape, and elastic. A sewing item does not include sewing machines or sewing tools such as pins, cushions, scissors, and needles. House Bill 791, which has a cross-filed bill, it's expanding the definition of digital products that became exempt. I think it was in last year's bill.
Yep.
I think that maybe it got enacted last year. I think it was actually 2020, and I think the governor vetoed it, and it was overridden. In the categories, and I'm not going to read everything that's in there, but a product having electrical, digital, magnetic, wireless, optical, electromagnetic, or similar capabilities where the purchaser holds a copyright or other intellectual property, so forth. And then computer software, software as a service purchased or licensed solely for commercial purposes. Those are the two broad definitions that they want to have added.
All right. Is there any hot topics that we need to be addressing? Because we're running out of time here today.
I think we've covered kind of the hot topics dealing with the bills that the society is going to testify on in one way or the other, whether it's oral or verbal.
Okay.
One bill I'll mention is House Bill 1284. That's a credit for cybersecurity measures undertaken by small businesses. Small business, 50 employees or less. If you've never had your business contractor come in and assess your business for security purposes, then the initial time would be a credit of $1,000, up to $1,000. If you've had it done, but now you're bringing somebody else in to do a further review, it's been 3 years since you've had it done, then that would be limited to a maximum of $500 credit.
Okay.
And with that, we will close it on that note from my
Okay.
side.
I didn't see any questions come up, so I think we're good to go on that. Jim, we appreciate you taking your time to join us today, and we'll keep on responding to the bills as they come in, and get our testimony in.
Okay.
Now, my understanding is that the Senate is back to live testimony, but the House has not made that changeover yet. Is that correct?
That's correct. Hearings that began on this past Tuesday, the 15th, the Senate is having live face-to-face hearings.
Right, and you get to go into hearing rooms and everything.
Yes.
But the House is still just doing Zoom testimony and written testimony.
Correct.
All right. Well, thank you very much, Jim. I appreciate you taking your time to join us.
My pleasure. Hope it was helpful.
Yep, it was for me. Thank you.
Yes, sir.
Have a good day.
Thanks, Bill. You too.
All right.